Well, very good evening to all our viewers. Welcome to Markets Tomorrow right here on ED9. What a day it was really for the markets. Flat as flat can be for the indices, and that's pretty much been the tone of the market over the last 6 to 7 sessions. So we've pretty much been wedged between 8600 and 8650 for the Nifty. Attempted pullbacks are being sold into, so the market is seeking direction right now. We'll talk about the markets and a lot more through the course of the next 30 minutes. Prepare you for trade tomorrow. Voices lined up on the show include Mahesh Nandurkar of CLSA, Mayuresh Joshi of Angel Broking, and Kunal Bothra will help our viewers with trading ideas to benefit from the session coming in. Top stories include, of course, the Nifty consolidating in a narrow range. Nifty, of course, holds on to the 8600 mark, however, closed below 8650. Hike in coal freight to hit cement and power firms, and those were the few pockets which were weaker in the session. Tata Power Q1 earnings disappoints, and that's why the stock saw a bit of a knee-jerk reaction. Walmart reviewing Welspun India's records, and the supply certification essentially for cotton supplies brought about a fair amount of nervousness. So second day of the trot, Welspun India closed a down circuit 20%, losing about 35% in the last 2 sessions. And then, of course, Reliance Infra concluded its deal with Birla Corp. And so, aside of paring down debt, there are a lot of business triggers which are helping the outlook for this one. On the stock too, it lifted sentiment. The question of the day that we are asking then is, will the August F&O series expire below 8700, and what would that mean for a longish September series? Kunal and Mayuresh, good evening to you. Kunal, I'll start off with you. I mean, if it expires below 8700, we're going to be looking at an extended week and a longish September series. What does the trend look like then?
Yeah, good afternoon, Tanveer. I believe that the markets will probably have more ammo tomorrow. I think with the late recovery which we saw today, I think a lot of sectors got stabilized. I think the IT sector was one of the major drag for the index for the last 5 or 6 days, which is why I think if you remember last week, second half, when the bank Nifty broke out of a bigger consolidation, Nifty could not break out or make a fresh high. Now the clear reason was the IT drag. Now today, if once the IT recovered, we believe that the markets would now probably have slight bit of more confidence going forward into the next couple of days. And I believe that with the kind of stock momentum which we're seeing not just in the large cap space but even in the mid cap universe, I think the markets would probably try and head towards that 8700 mark. So I believe that with the expiry for the next couple of days and with the view that the markets recovered today in the second half, I believe tomorrow or probably in the next couple of days we should be heading towards that 8700 mark on Nifty.
Okay, Mayuresh, what's your own sense?
So evening, Tanveer. So clearly I think for a re-rating to happen from these levels, valuations almost at fair levels. So corporate earnings need to revive in a sustained and a consistent fashion, which we believe the second half of this fiscal will start throwing up better results post Q3 earnings. Till that point of time, my own sense is that with good monsoons, the pay commission recommendations coming through, you will see some amount of respite starting to inch up in earnings. However, having said that, probably I think in the short to medium term, I think we will be swayed by what the global markets do, what the Fed does in terms of policy action, the central bank actions worldwide, and the movement of crude and the currencies thereof. So clearly I think global volatility and global cues is something that we will respond to and react with in the short term, but largely I think consolidation might be the theme over the next few weeks and months, and it will be more stock specific in my opinion from a bottom up approach from the current levels.
Surely it would be. Welspun India, Mayuresh, your own sense on the stock and the downside there is?
No, again, don't really track this, but again, I think the kind of expectations that the street has with the loss of one of the biggest clients, I think the reaction probably is there on the stock price, but really don't track the stock in greater detail, so very difficult to comment.
Yeah, and on the flip side, do you track Fortis Malar housing the diagnostics business in SRL, a shot in the arm, more upper circuits, you think?
So again, I've always maintained, Tanveer, on a channel for so many times that the diagnostic industry itself is expected to do well. It's currently standing around $5.7 billion odd. The volume growth thereof is expected to move around 15-16% on an annualized basis. So in the next 4 to 5 years, my own sense is that the industry itself will touch figures of close to $9.2 billion odd. Now within this industry itself, 48% of the revenues are from standalone centers, which form a major pie, followed by hospitals at 37% and chains like SRL, Dr. Lal's, probably rule around 18% of that overall market. Having said that, probably what standalone operations of the diagnostic business for Fortis specifically is a high margin business, anywhere between 22 to 23 odd percent. The kind of revenues that they probably earn on an average basis is quite high, and again I think the kind of spread that they've got compared to Dr. Lal's and the kind of expectations that one really has in terms of valuations on an EV/EBITDA basis at the current juncture, I think it is in a very, very sweet spot. So as a group, I think I am very, very, very optimistic, not just on the diagnostics business, but even on the healthcare business. So any declines onto the counters should be seen as long-term buying opportunities by investors.
Okay, fair enough. Let's recap some of the top stories in the session. Indocount cracked in trade. Vivek joins us with better understanding of the numbers there. Vivek?
Well, one of the stocks that was very, very active in today's trading session. In fact, it tanked quite a bit in today's trading session. Towards the start of the day, Indocount Industries, although it started off quite muted, it tanked quite a bit, and in the middle of the day actually the stock actually managed to recover almost 7% from the day's lows. However, towards the end of the day, as the results came about, and the results, although if you're comparing it on a year-on-year basis, weren't as bad as what the market was fearing, it still fell quite below analyst expectations. On the back of that, the street was in no mood to actually go ahead and give the stock any respite, and the stock actually tanked at the end of the day's session. Taking you through the numbers, sales on a year-on-year basis up almost 6%. Talking about the profits up almost 15.5%, and margins came in slightly higher than last time, around the 24.7% mark. The stock actually went and snapped a 3-day gaining streak. Stock is currently trading at the lowest level since May 2015, and if you're looking from the recent high, the stock has actually gone ahead and tanked almost 35%. So that was the story of Indocount today.
Thanks, Vivek, for that. Indocount down 14.5%, 15%, sub 800 coming in for that stock. Big selling pressure seen on this one. Quite a slam dunk actually in intraday trade. Railways, as a surcharge on transporting coal beyond 100 kilometers, coal transporters must pay an additional 55 rupees a ton both at loading and unloading points. Yatin Mota joins us to understand the ramifications of the story on listed companies, the immediate impact on stocks. Yatin, take our viewers to the implications.
Well, the railways has decided to increase the freight on coal, and the coal freight increases by up to 19% specifically for the coal commodity. Of course, if you look at the breakup, up to 100 kilometers there has been no hike in freight rates by the railways, but if you look at the crucial range of 100 kilometers to 500 kilometers in terms of the transportation of coal, there we have seen a 5 to 15% kind of average hike depending on the region and depending on the traffic of railways. So clearly this comes in as setback for cement companies, steel companies and power companies, to be specific. Of course, for cement it's a key raw material, and probably because of hike in freight rates we could see some margin pressure immediately for cement companies. For power companies, this event is seen as neutral by the analysts, given the fact that they can probably pass on these hikes to consumers. Steel companies, as a proportion of overall revenues, the cost would increase, but not as substantially as one could see in cement, according to analysts. So on an overall basis, given the fact that the railways have decided to hike the coal freight immediately, cement companies and steel companies would have some cost escalations, and given the fact that the demand is quite sluggish, there is very less chance that in the near future they will be able to pass on the cost to the consumers.
Yeah, that's indeed the case. Thanks, Yatin, for summing up that story. What did you make of it, and how these hikes in coal transportation would be transferred to the end consumer, Mayuresh, the immediate impact?
No, again, I think Yatin has summed it brilliantly, but again, What really goes through is what kind of pass-through can we actually see happening over the next few months because of these hikes. So the power companies will definitely be able to pass this on. Whether the cement and steel companies will be able to do so and in what aspect and what proportion is to be seen. But again, I think it might have some amount of impact. From my own sense, it will be very, very negligible on the operating margins. And again, I think one really needs to bifurcate, Tanvir, because a few cement companies probably are having operations very close to either their split grinding units or either their clinker capacities. So largely, I think these companies might get lesser affected because the radius in which they transport coal and cement to the end user industries, I think is lesser than 250 odd kilometers. So largely, I think even if the impact does come through, I think my own sense is a negligible impact on the operating margins. And once the demand probably starts coming back over the next few quarters, my own sense is slowly and steadily it will get passed on without having a substantial impact on the balance sheet.
Okay, I just want to highlight the trade of the day, which is Welspun India, because it's the second day on the top that the stock fell, locked in circuit, lower circuit, that is 20%, losing about 35% in the last 2 trading days. Now, after Target, Walmart has put the company's supplied products under the scanner. Walmart has, in an official statement, the spokesperson of the company has clarified that they're reviewing Welspun's cotton certification record, because that was where the problem was when it came to Target. And Walmart's examination is underway, plan to hold additional conversations with the company. Walmart is Welspun's 3rd largest customer. Target, of course, being the 2nd largest customer, terminated the company contract with the company after sheets and pillowcases were mislabeled as Egyptian cotton. Now, some of the other key customers of Welspun India, and this is why the stock is in a spot of bother, are Bed Bath & Beyond, a key brand overseas, JCPenney and Macy's. Again, all marquee names, all marquee clients, and 2/3 of the revenue of this company comes in from US markets. So it's very, very critical how the market views the developments with regards to client conversations and how much confidence those clients are able to keep with the company and the supplies that it makes. So, you know, that's going to be a key story that the market will be monitoring very closely, because 35% gone, with outstanding shares to the tune of 2 crore plus, still standing as pent-up demand on the sell side. One can only perhaps guess how much pressure the stock is witnessing right now. Sub 70 in the session today, 66.10 at last count. In the opening minutes of trade, it hit lower circuit. We'll take a short break. When we come back, we'll focus on tomorrow's session squarely. As we head into that break, here out Mahesh Nandurkar of CLSA outline his India view.
Let's say a year or 2 year view, I feel that there is a pretty high possibility of a risk off. The debt market can probably deliver better returns over the next 12 months as compared to equities, and that still is a possibility in my view. There is also this expectation around the bank capitalization. I mean, we have seen one leg of the PSU bank recapitalization which has already happened, and the expectation is building up that there is likely to be some action on that over the next few months, which will probably be slightly bigger than what the year beginning budgeted amount by the government was. So I would say, tactically speaking, it makes sense to be positioned in the in the large PSU bank space where there is enough capital, etc. But as I said, it's a tactical call. Fundamentally, I would still be more comfortable with the private sector banks.
Welcome back. You're still watching Markets Tomorrow right here on ED Now, and there is a lot to watch out for in tomorrow's session. But very quickly, Mayuresh, I want your view on the IT pack, HCL Tech, Infosys, TCS bounce back. Are you recommending clients to buy?
So again, Tanveer, I think they will underperform for the better part of FY17 for obvious reasons. Q1 has been a little disappointing in terms of wage hikes and visa costs. And again, a few companies did give a miss on the revenue guidance as well. Q3, Q4 expected to be traditionally weak. So the performance hinges on Q2 going ahead. But what we'll probably see is what happens with Brexit unfolding over the next few quarters and the consequences thereof in terms of discretionary spending. So a large part of FY17 probably might be an underperforming kind of quarters for IT companies, but such declines in my opinion give buying opportunities for long-term investors. The stock corrections have made valuations attractive, and in my own sense and opinion, for the next 2 to 3 years I think these stocks are poised to do well. On any further correction, investors can buy it in a very staggered fashion.
On the charts then, Kunal, do you see Infosys as a buying opportunity?
Well, Tanveer, I think most of these stocks, Infosys, HCL Tech, Wipro, Tech Mahindra, also to a large extent. I think these stocks from the IT pack, they're going through what we call as a series of downtrend. So I think what we saw today was probably a very short-term rally, because I think the larger trend, or the trend which has developed for the last couple of months at least for many of these stocks, they've now gone into a series of successive lower highs and lower lows. So I think for anyone who's looking at a short-term trade, I think it's better to wait, for many of these stocks to try and give you a decisive breakout, because I think till the time you don't, see a decisive breakout of this series of, downtrends, then the stock would probably be sold into, the rallies will be sold into. So I think, from a trading perspective, I would try and look at, rallies to short, probably Infosys, even names like Wipro and HCL Tech. But I think, if anyone has to look at long positions, I think wait for a decisive breakout on the upside.
Okay. I just want to bring up Idea Cellular. Last 3-month and 6-month chart would show what the stock has been up to. In today's day of trade, there was a bounce back, technical in nature, 7% higher, which took it above the 100 mark, which has been the baseline, really, the support zone for the stock. As you can see on your screens, over a 3-month period, and when we extend that timeline, over 6 months too, you would see how 100 was a pivot point for the counter, from where it has, which it was trying to kind of defend, but from there it has broken down. So last 4 months, last 6 months actually, it's lost about 5%. Do you see this as a conclusive move, Kunal?
Well, I think this could be a start, Tanveer, because I think it's not just today's move, but I think if you look at the last 5 or 6 days, there were many block deals happening in Idea. The volumes in the last 5 or 6 days was, the average volumes rather was higher than the last couple of weeks I have seen for the stock, and the price did not break any major supports post that bigger crack which you saw start of the month of August. So I sense that probably you might see some bit of accumulation, but I think accumulation on a longer term time frame takes time to develop. So since the fact that the stock is below its 200 moving average and also below its 50-day moving average, you generally want the stocks to take some more time. So I think one has to probably wait, be patient. If the stock crosses 200 moving average, then I think would be a first confirmation that the stock has bottomed out.
Okay, Mayuresh, your top 3 investment bets very quickly. We have 2 minutes to close the show.
So again, I think Aurobindo Pharma, the results are out, so I think investors should wait for numbers to come out before taking a call. But largely, I think the acquisitions that they have done, Actavis and Natrol, ensure that 80 or 90% of their sales are coming in from the formulation business. 180 plus applications pending with the US FDA. They're expecting high margin injectable business launches of around 18 to 20, which will aid their margin performance. Natrol is doing exceedingly well. Actavis is probably supporting, and they're expecting that to turn profitable by the end of this fiscal. So largely, I think on a combined or consolidated performance, valuations looking attractive, margins expected to stay in the 23.5-24% range, expecting a 15% compounded growth for the next 2 years. But investors must wait for the results to come through and wait for declines. The other stock probably has a theme, EPC is something that I like. PNC Infratech has a very strong order book of almost 5,200, 5,300 odd crores. Again, I think the kind of execution that they have done, the kind of reforms specifically from the roads sector itself will augur well in terms of orders coming through, specifically on the EPC side. No large commitments specifically on the bought portfolio that PNC possesses at this point of time. And the new projects or orders that they probably won is going to be margin accretive over the next couple of years. So our own expectations is a 20% revenue growth over the next 2 years, margins on the standalone and consolidated basis to expand. And again, I think valuations to probably improve going forward, leading to a re-rating in their price earnings multiple. So PNC Infratech from the EPC space is something I continue to prefer.
Okay, that's a long-term bet. Kunal, come to you and trading ideas for our viewers tomorrow.
Yes, Tanveer, the index call which I'm looking at is a buy on Bank Nifty. As I mentioned earlier, the Bank Nifty has already given a clear breakout. 19,200 is a very good support for Bank Nifty. So keeping that as a stop loss on spot levels, I would look out for 19,600 as a target tomorrow. The two stocks which I'm recommending, the first one is a buy on Divan Housing Finance. I think the stock has gained momentum post a consolidation for last 2 or 3 days. Managed to close at the high point of the day. The volumes and the indicator action suggests that there could be much more room on the upside going forward as well. So 285 is the target which I'm looking at on the stock and a stop loss of 266. And from the banking space, Oriental Bank is the stock which I am bullish on. Stock is forming a bullish flag pattern. It's been consolidating on the short as well as the medium term time scale. But I believe that post this consolidation, since the indicator has already given a bullish breakout, and the stock should probably come out of this consolidation on the upside. 128 is the target which I'm looking at on the stock and a stop loss of 115.
Okay, great. German, thanks very much for taking out the time to speak with us today. Appreciate your ideas and your thoughts. Time out on Markets Tomorrow. We'll catch you with the markets as always tomorrow morning at 8 a.m.